Okay, so hello everyone. Today I'm gonna summarize about the yesterday US stock market. I also gonna have a touch up a little bit about the Asian and the European stock market. So yesterday the US stock market was put in a constructive session as the broader S&P 500 index and the Nasdaq moved to a new high record. In contrast, the Dow Jones Industrial Average encountered some kind of selling pressure, some selling pressure from investor. So we could say that it is quite mixed, considering like the publishings of the economic data. Yeah, so Dow Jones, yes. Okay, so you can see here the Dow Jones associations. Yeah, so it is closed lower yesterday, as you can a little bit, like just slightly um, higher, but is need to suffer from a lot of selling pressure due to a weakness in a couple of key names. Investor overall seem quite optimistic about the nation economic growth and pleased with the president infrastructure program. However, concerned about the new coronavirus variant could prolong the pandemic have started to emerge. Overnight, the international market delivered a very mixed performance. So, the in Asia, the Nikkei traded notably lower. Here, notably lower. Yes, around minus. I can say that it's around minus 2 point almost 2.5%, while the Kospi index from Korean market exchange also trade really low yesterday in June 29th, while the Hong Kong also has the same. While like in Europe, the FTSE 100 managed to make some progress. As you can see here, it is close a little bit higher yesterday, which is June 29. You can see here, and also some kind of other index like DAX index from Germany also closed um, a little bit higher yesterday. They under some selling pressure today, but I'm gonna discuss about it later. In economic news, there are no major news yesterday regarding the U.S. stock market. Today we're gonna look. Okay, so we're gonna look at some consumer confidence number. So um, consumer confidence number here for the month of June. So this show a really kind of positive news because um, as we can see here, along with a couple of housing market report. Moving ahead, the employment situation returned to the spotlight this week. Consumer confidence index closed quite high, like quite positive. Uh, moving like ahead, looking forward to tomorrow, we can look at some other data like autonomic, like I'm sorry, autonomic data processing tomorrow, which is today, will release its private sector employment figures for the month. And on Thursday, the latest weekly jobless claim will be also published. Finally, on Friday morning, the government will publish its kind of national news, like kind of employment news, which is quite important to look forward to when you're trading forex or kind of index. Okay, so many more news is about like I already said about the consumer confidence index. As you can see here, it's short in June, gaining around 7.3 points, which is around 6.1% on the top of an upwardly revised May to reach 127.3. The reading was like a pandemic era high and rival pre-pandemic levels with a value just 1 point short of the 2019 average, which is quite good. This survey point to a very likelihood of a robust consumer spending growth in the second and the third quarter amid a nearly complete recovery in the consumer confidence. Also, I don't have the specific data here, but like also there are some report available here. But okay, I gonna link it in the below description about the all of the reference. I gonna mention in this videos. So the purchasing plans also rose modestly in June, but were still depressed. The share of respondents planning to buy home in the next 6 months rose 0.8 point to 6.1%. Although although it's in gray, but it's a little bit still depressing. Also, the U.S. like monthly home price growth in April remained very strong. The 10 city composite index was up like 1.4%. 1.4% month over month, while the 20 CD index was up 1.6%. Overall, the number is quite, except for the purchasing plan data, which can, show some kind of the investor confidence in kind of, further investing for like some kind of new or like more innovative projects. Okay, also yesterday we looked at the US 10-year and 30-year government bond. We can see that it point lower, which signal a really positive news for the economy because the mortgage rate gonna lower and people more confident to put in kind of borrowing and lending activities, which is good news for the part. But we need to look for like 1 or 2 days later to see if this is like gonna be the long-term plan or it's just like a short-term kind of correction. Yes, also let's look a little bit at the so this is okay, so I want to mention a little bit about inflations because like yesterday also like the United States for federal opening committee have also signaled that they're gonna increase the kind of the interest rate to balance out inflation. And there are many concerns about whether the inflation, how much is gonna affect the economies, all those kind of thing. So there's an article on MarketWatch. I think this is quite okay. We can reference it. So the article name is like what a 10-year treasury rate dip below 1.5% may be saying about inflation. Basically, this article saying that we are already at the higher cost situation when the cost of living is quite high and we all need to kind of suffer from it. And there's like Fed past rate of stimulus should try to push inflation. So as we can see here, lower inflation from more stimulative monetary policy. So basically, this article is saying that Fed has like trying really hard to sort of keep credit flush during the pandemic and borrowing costs low for household corporations. But as the economy and labor market news has signaled that interest rate could rise current range more than quickly than initially anticipated, and including like said that while global forces impact the U.S. Treasury market, a 10-year rate plumb also likely reflect domestic economic headwind, and in general, we are going to run through a cyclical wave of above normal inflation rate, while like also pointing to like although the price pressure have went up a little bit and the supply chain disruption rear up in the early reopening phases of the pandemic. Yes, so we also see the massive increase in the US debt, but we also see like also weigh on the US GDP economy. So the situation we're in right now is we are dealing with inflation, and there's not much to worry about it because this is the must do, like the kind of quantitative easing is the must do regard to the current economy, and the increasing in interest rate also like kind of help out the economy a little bit and to balance out the inflation rate. One of the article regarding Goldman Sachs analysis about the current market is like stock market faces two big headwind. Like basically this saying that we are like it's maybe really hard for the market to kind of sorry for the company to fully recover due to two main reasons. First of all is because of the higher interest rate imposed by the Fed fund rate, the Federal Reserve, but also because of the higher corporate tax imposed by Biden, President Joe Biden. So this is one of the news that I think is quite important, because with this news, like about the investor can consider more about their reflation rate, whether or not they should like put money, betting money on the kind of stock that gonna promise like really huge like fast growth after the pandemic. And like or allocate like for fund manager, they can allocate their investment better for like to balance out this if these two important effects on their stock portfolio. Okay, so that is the sum up of the interest rate inflation news about whether or not the yeah, so basically the value investor are more like maybe or more um, kind of in favor right now due to the reflation, like the reflation rate. However, we need to look further based on these two yeah, two like the two news about two new policies. And last but not least is the commodities news. So I'm sorry, the commodities is quite the commodities. So gold closed lower. I'm sorry, closed like lower, -1%. I'm sorry, -1% yesterday. Silver -1.3% yesterday, and copper is all closed lower. While oil increased a little bit yesterday. I'm sorry, this statistic has already fluctuated, but yesterday, which is 29, is closed higher, while the US dollars closed higher due to the gold closed lower. So there's a real correlation there. You already knows. Okay, so maybe they gonna focus more on the growth stock due to yeah. So this at this rate it is quite complex if whether to choose between the US value stock or between the US growth stock, because US value stock are more for those who bet higher inflation, and growth stock are more low inflation. But right now, make some adjustment with the higher inflation. So maybe they're gonna, transit a little bit from U.S. value stock to the U.S. Growth stock. Okay, so that's it. That's for today economic news. Oh, sorry. There's some really interesting news that I should mention is about like the so wait for the economic data released tomorrow about the automatic data processing. On Thursday, it's about the weekly jobs claim, and finally on Friday morning is slated to deliver the June employment report. It's really important. In the corporate arena, the second quarter comes to close tomorrow, which is today. I'm sorry. In the coming weeks, numerous companies will be weighing in with their numbers and providing guidance for the remainder of 2021. So I really look forward to those data and gonna discuss with you right after the stock market section close tomorrow. Yes, so that's for it. I'm really hope that my kind of market summary videos can maybe of help to you. I'm sorry. Lastly, so yesterday was quite a really kind of big news about Binance. So let's look a little bit at the Binance, the cryptocurrency, like so. Okay, so Bitcoin is quite, of course, it's closer due to this news. So this is just released, I think, earlier this morning. So Binance is confirmed by like here. Binance one of the biggest, but UK government has said that Binance does not have the right to operate any kind of financial kind of activities in the countries. So this news gonna have quite big effect on the cryptocurrency trading. In the next couple of days, we're gonna see whether or not this will have the bigger effect on the confidence of the investor about cryptocurrency in the long term, or whether this is just like some kind of short-term thing. So we expect to see cryptocurrency gonna lower a little bit today, and maybe money gonna pour more into like the US dollars or kind of US stock, because so cryptocurrency and many other kind of hedging assets like gold maybe higher a little bit today. So let's see. So meet you guys tomorrow, and hope like I can update the most important news and have some kind of analysis to kind of get us to know more about the current market situation in the US, fundamental US mostly, and also other world. Thank you so much.